traders, and welcome to the third video in MDR and talking about vcdepth.io, the website. If you haven't seen my first two videos, it's not completely necessary to watch those to understand this one, but it would probably help if you did see that. Let's get right into it. This was a three-way tie for the Patreon vote, so I just picked my favorite one. And what we're going to be looking at today is using MDR, using these bids and offers, using limit orders to buy, limit orders to sell, and engaging that market depth as supply and demand. And what we're also going to be doing is looking at trading an altcoin with two different MDRs. So with using different MDRs to give us a better probability chance of being correct on the future price movement of a coin. And then to finish it off, we're going to look at the updates made to vcdepth.io. Now they have a 5% tracker. So instead of just showing the entire order book, there are this many bids added together, there are this many offers added together, you can now select 5%. So 5% within price, which shows you more short-term demand and short-term supply. But that's towards the end of this video. So combined MDR, what this is down here. vcdepth.io is the site. And if you go down to the historical combined global market depth, that's what we are looking at here. And the red is limit orders to sell. The green is limit orders to buy. And the way this is calculated is it adds together all limit orders to buy on all coins, not altcoins, on all coins, Bitcoin, all coins. It adds all the bids together and tells us how much buy pressure there is. And it adds together all of the offers, all the people trying to sell, the US dollar's worth of all those people trying to sell, and then it adds that together and it graphs them here. So this is a really good gauge for the overall crypto market to show us for how much demand and how much supply there is within the market. Now, when I'm talking about supply, when I'm talking about demand here, I'm not referring to coin supply and I'm not referring to any kind of blockchain demand. What we're looking at here is I'm going to be calling limit orders to sell supply. So the added together limit orders to sell is supply, and in all of the added together volume for the limit orders to buy is demand. Now, when bids are greater than offers, or when demand is greater than supply, we'd expect. So when the green is higher than the red, that shows that the demand is higher than supply for the overall crypto market depth. But of course, you can extrapolate these rules onto any specific bids and offers for any altcoin as well. And when we see that demand is greater than supply, we'd expect that the cryptocurrency market's likely to increase in value. And the reason we expect this is back to Econ 101 or Intro to Econ or any economics class that you may have taken, if you taken it in high school or in college or just on your own time. When we have demand higher than supply, we would expect that price is going to continue to rise until demand is equal to supply, or until supply overtakes demand, until supply grows higher than demand. And the reason that price is going to likely rise is that there's going to be a competition between the buyers, the people who are trying to buy, and they're going to try to buy, and by trying to buy to get filled at all, so to get their orders filled, they're going to have to keep placing prices higher and higher than each other to try to entice someone to sell to them. And then that's going to continue to happen until we see that there are just as many people trying to buy, just as many people trying to sell, and then we have equilibrium, where they're equal. Vice versa. Let's say supply is greater than demand. We have more people trying to sell than people trying to buy, so the sellers are going to continue trying to sell at lower and lower prices to try to entice a buyer to buy their sell order, and that's going to continue to happen until there are just as many sellers as there are buyers, and then we have equilibrium there as well. Now what we're going to look at is, that was like the intro to economics. Now we're going to go a little bit deeper into economics. And when we do this, what we're looking at is MDR and the bids and offers of coins. So what I wanted to show here is different kinds of situations that can occur with the bids and offers, and showing what price is likely to do because of each of these situations and why that should happen. So let's get right into it. So first example for the bids and the offers, and I'm going to represent the bids with a green line. I'm going to represent the offers with a red line. So demand is going to be green and red is going to be supply. So imagine that we have bids greater than offers for our our first example here. So with this, imagine that we start off with actually the opposite. So we start off with offers are greater than bids. So we have this kind of formation here. And the bids actually start off, let's say, down here. And then we get this to happen, where the bids actually overtake the offers. And what we'd expect to happen here, oops, wrong color. What we'd expect to happen about here, that was not the greatest circle. I think I can do better than that. Come on, good circle. Oh, it's okay. It's like a decent circle. 6 out of 10 circle. So what we see here is we saw demand equal to supply at this point in time, and then we see an increase in demand, and then we have demand is greater than supply. What does this mean? What did price likely do? So this is what price had likely done. With this kind of situation where the supply is higher than demand, and then the demand increases and overtakes supply, what price likely did is this. Price was likely falling, and then it may have fallen flat at this point of equilibrium. Now, the reason that occurs is, again, well, you may be wondering, why is it that price is falling, but supply is falling as well? People trying to sell are falling. There are two reasons. One is that people become less interested in selling at lower and lower prices overall. So, if you would ask a seller, would you rather sell at 4,000 or at 3,500? The answer should 100% be sell at 4,000. When price begins to drop lower and lower, it doesn't become very enticing to sell from a theoretical perspective. And the second reason why we get supply falling when price falls, and this one's probably a lot more important, is that there are less people able to sell. So there comes a point in time in any downtrend where everyone who wanted to sell has already sold. All potential sellers have sold. Now what this means is that any long who was going to get liquidated, there comes a point in time, he got liquidated. Any long who's going to get have their stop loss hit, they had their stop loss hit. Any investor or long-term trader who wanted to sell has already done so. Any short-term trader who doesn't use a stop loss and just scalping has already done so. Anyone who made the decision to just never sell, they make the decision to never sell. So that means that they're not even a potential seller anymore. So what I'm showing here is from the long side, they all have sold. And then from the short side, we have, let's say, as this happens, as price is falling, shorts are entering. But then there comes a point in time, a price point in time, where the shorts lose interest, where the shorts just aren't interested in entering anymore. Now, here's what typically occurs when this kind of thing happens. This is what price did during this point in time. Now, here's what we expect price to go after this. So imagine price is here. Time, price, and imagine that at this point in time, price is here. Okay. So what we'd expect is for price to rise. Price, starts out flat and then it rises. This could be a retracement upward, or this could be a full reversal upward, depending on your time frame. Now, the reason this occurs is we see that demand has recently overtaken supply, and in this point in time, price was flat. So price isn't going anywhere. More buyers are trying to buy than sellers are trying to sell. So there's going to be a price markup, and price is going to likely rise. All right, second example is let's look at when the offers overtake the bids. So we now have bids are here. Now imagine the bids begin to fall like that. What was well, actually, I'll first show the offers. Offers were here, so the supply was there, and then supply overtook demand right there. So if I show a black circle, hopefully this is like a much prettier circle. Let's see. Okay, that was not a pretty circle. It was like a 7 out of 10, slightly prettier than that one, I think. So what price likely did here was price had likely risen. Price rises, and then maybe it had consolidated here. It had just stopped rising. Or maybe that could be just a small move downward, just a low volatility move. Reason this occurs is price is going to rise because demand is higher than supply. But then price is going to reach a point in time where supply gets higher than demand, meaning that people who wanted to buy in this uptrend have already bought. And then we get more interested people trying to sell. And as you can see here, we get to a point in time where more people are trying to sell than people trying to buy. And as you can probably expect, what will price soon do? Yeah, price is soon going to fall. So price falls. Now, final example is, let's say that bids are just equal to offers. So let's say we have bids here, and the bidding goes up. So demand goes like that. Let's say, and then the supply or the offers go from here, to like there, and they're just about equal for, some time. Now, what did price likely do if these rates converge? Well, price honestly could have done anything here. This could have been a point in time where if the bids were rising, the offers were falling. If demand was increasing, supply was decreasing, then price may have decreased itself. That's what price may have done during this time period. Or price may have just been flat altogether, and that's why you see some convergence and just demand is at equilibrium with supply. So let's just imagine that this scenario, price was flat, and the demand just eventually became equal to supply. And what we'd expect price to do is just to continue consolidating. We'd expect price to continue to consolidate here because there are just as many buyers as there are people as there are sellers. So with this kind of situation, we wouldn't really expect price to do anything too crazy. However, price consolidation, especially for Bitcoin, and you can imagine that this is the combined bids and offers, and that here we're talking about Bitcoin for the price. Consolidation isn't going to look just flat. You might have a move like that, then a move like below the average of consolidation, and then you might have a move, above that high to stop out any shorts, then a move below that low to stop out any longs, and then a revert back to the mean, and then a continued, sideways move. So that consolidation is not going to just be flat. So do keep that in mind. So yeah, this is just one thing that I did want to show, just to zoom out and just show a little bit more theory and apply it to economics. And hope some of this makes sense. We are going to be referencing this a little bit too when we look at this. So moving to the actual things that happen, let's take a look at the historical combined global market depth and compare that to the changes in the price of Bitcoin. Here we can see that the offers are a lot higher than the bids, so meaning supply is a lot higher than demand right now. Then supply began to fall, and demand began to fall. So you can see here. And to show you guys what that point in time was, that was here. Point number 1. Now, you may notice that there came a point in time where they were at just about equilibrium, right? And that looks to be at about November 15, November 16. So let's say about November 16th. What was happening November 16th, and what was price doing when supply was just about equal to demand? Well, November 15th, November 16th, I know it's kind of cut off here. I think I can just show it here, but pretty sure that was about here, because this would be the 19th. And if this distance, 19th, is here and the 25th is here, then this must be the 13th. So 13 to 19, in between 13 and 19th, that must be the third. Okay, you know what? I'm just going to pull up XBT USD. It does not have to be this complicated. Yeah. So November 16, that point in time that we're talking about, yeah, it was just right here. So it was when price was flat. Perfect. So that is what we had seen here, that actually supply had become equal to demand, so price went flat. And this is exactly what I was showing here when we see supply converging on demand. Supply is falling, demand's rising, and as a result, price just goes sideways. Price just went sideways, and I think you can see that here, that the price had just gone sideways. Now here's the interesting thing: price continued to go sideways until we got that right there, November 18th. You can see supply rises, demand falls right there. Not great. I think that's about November 18th, November 19th. And November 18th, November 19th was right here. So right about here, we get supply beginning to increase and demand beginning to decrease. So we move from a state of equilibrium of the bids and the offers. So, we're at just about equilibrium here to clear dominance of supply over demand. Price falls. And then we can see they're very, very similar here. Really not much of demand isn't really that much higher than supply. But you can see that eventually we do get a point in time here where price goes up because demand's higher than supply. You can see a bit of that here. But let's go to point number 2, because this point I think is a lot more powerful. We can see that here supply is just completely fallen off at this point. This is the point in time I'm talking about right there. Now supply is really low. Demand spikes up. Now where was point 2 in the Bitcoin chart? Point number 2 was here, right before that big rise. What happened after that big rise? Well, we get point 3, which was November 28th. Now, November 28th, the end of the day, November 28th, was just about here. We have stagnant demand, or demand's not really going anywhere. It's flat, but we get rising supply. Not a great sign. So with this rising supply and flat demand, price goes down like that, as you can see here. And then what we get is point number 4, where the sellers just lost interest. The supply just kind of fell apart on December 8th. December 7th, December 8th. We see demand is higher than supply. Very clearly, demand is higher than supply. On 4 was here. We got that little price rise, and then just price kind of just didn't do much. Then we got point number 5. Point number 5, we have a clear dominance of demand over supply. About December 15th, December 16th. And on December 15th, December 16th, that is, December 15th, December 16th. That's point number 5 right there at this bottom. And then price really has a beautiful rise from about 3,200 to a high at the sixth point that we're going to talk about, to about almost $4,200. Point 6, we see, so demand is higher than supply. Demand is higher than supply. Demand is higher than supply. Oh, equilibrium. Equilibrium here. Supply is higher than demand. And we get this same exact situation here. Demand was higher than supply. We had more demand there. We have more demand here than supply. But then supply eventually overtakes it, which is here. And when supply overtook it, that's how we get to point number 6. And point number 6 was here, where price goes from about 4,200 down to a low of about 3,800. So pretty significant price drop. Then price rallies back up to point number 7. Now, point number 7, we have probably the greatest difference between supply and demand as we've seen yet in here. There's a very, very big difference between, and what we call that difference is the MDR, or the market depth ratio. And the market depth ratio here, I think, was very negative. So we have a lot more supply than demand. December 24, point number 7. Point number 7 was here, and because we had so much more supply than demand, price really falls this time from 4,200 now to about 3,600, or right just below that psychological level. Price really falls. Now price continues to fall, but then we get point number 8. Now point number 8, we get demand higher than supply right there. And point 7 to point 8, this is kind of similar to, again, just this. Price is falling very rapidly. Supply decreases, then we get demand increases, demand is higher than supply. Demand becomes dominant over supply, more demand than supply. And when that occurs, that's what happened with point number 8. So price really couldn't go any lower because anyone who wanted to sell has probably already done so. And a lot of people are looking now to buy, as you can see from demand being a good deal higher than supply. And then what we get is really not much anything interesting here. I'd say January 1st, January 2nd, we're about at equilibrium, where the bids and the offers are just about equal. But then we get a clear dominance in point number 9. Let me show that. Point number 9 was from about here to here. This entire price range, we clearly have more supply than demand. We just have so many people trying to sell and just not that many people trying to buy. So we would expect probability-wise that because we have excess supply, I think it's called, like more supply than demand, price should fall. And price fell, and then we actually reached equilibrium. So again, supply was equal to demand. The amount of bids was equal to the amount of offers at right about here. And that was, I didn't mark this point, but that was at about January, I'd say January 10th, January 11th, I think you would say that too. January 10th, January 11th was about here when price began to consolidate. And again, why did price consolidate? Well, price began to consolidate because the bids and the offers are just about equal. They're at equilibrium. You know, as you can see here, we expect consolidation, like I've said like a million times, but we expect consolidation when the bids and the offers converge and go to equilibrium, because we have an equivalent amount of buyers and an equivalent amount of sellers in this kind of scenario right here. But then what we get is excess demand. Demand is dominant over supply at point number 10, January 14. Now, point number 10 was here. Right after we had some consolidation, we had an equilibrium. And then once price drops, there just isn't enough supply to continue price dropping lower. We have more demand. So at point number 10, price quickly just shoots up. As you can see it, price shoots up and then that fails. As you can see, we have more supply. Again, just not healthy. Then January 20th, I definitely marked that wrong, because you can see, I think I should have put the 11 there, because this dominance was January 20th. So just imagine that this 11's here. That was before price dropped. So what we saw actually was what we saw was that we had a lot more supply than demand. Same exact kind of scenario with 0.9 and 0.11, where we get a lot more supply than demand in 9. We get a lot more supply than demand in 11. So price falls, as you can see. And then we don't really make it to equilibrium. I think we almost do January 21st, and that's like around here. We make it to equilibrium and price begins to just kind of go up a little bit. But then what we see here is it's clearly, again, and this happened a few days ago, supply is higher than demand. Guys, it's just supply is clearly higher than demand here. Supply is flat, demand is flat, price is flat. This kind of situation was exactly what had occurred, I think, here. Well, kind of would have occurred. We had equilibrium, and then supply grew greater than demand, so price fell. Here, we never even got to equilibrium. The sellers were still greater than the buyers, so yeah, price really fell here. But now what we see is that we're at about equilibrium, as you can see there. And I took that picture about an hour ago. So if I go to the current point in time and go to the 5 minute, we're currently in a state of consolidation. This is what I would expect. I would expect consolidation, because just looking at the bids and the offers here, you can see that the MDR is only about 0.16%. That means that there are about 0.16% more bids, more demand than supply. Because when I was showing those screenshots, we had to just use like a visual to see how much difference there was. But the difference is actually much better quantified by MDR. You can see that number right there where it says MDR negative 3.29 or MDR 2.26. Now, a really interesting thing that I can see here is you can see the point where you have excess demand. We have about plus 4.74% demand at about 11 a.m. Eastern. Let's go take a look at a short-term example for Bitcoin on the historical. What happened at 11 a.m., around 10:50, 11 a.m. Eastern? I was here. 10:50 was about at this point in time. Yep, right there. So right here is where we get a lot of demand entering the market. And when we have all of this demand here, a clear imbalance of about 4.74%, and now it's 3.62, and it stays flat about the 3 to 4% range. More demand than supply, we would expect price to go up. So, if you had noticed that, price went up. However, overall, you can see that they're just about equal now, and now price will probably just stay flat. So that is one way you can use the historical global market depth and look for, do we have excess demand, meaning more bids than offers? Do we have excess supply, meaning more offers than bids? Or do we have equilibrium, where bids are equal to offers? And if we get situations like this where we have more supply than demand, this should be a warning sign to a lot of people to probably be exiting some altcoin positions, to probably be exiting any Bitcoin positions, and potentially, if you want to be aggressive enough, to enter short on Bitcoin. So going back to the thing here, I don't want to make this video like way too long. But in this next one, what I showed is instead of showing the bids and the offers, and here we're showing the bids and the offers for the global market depth. So for all cryptocurrencies added together, here it's just Bitcoin, just the bids and offers for Bitcoin, but this time it's represented as a percent. So how many more bids are there than offers, or how many more offers are there than bids? And you can see that here. And I don't really want to go through this because this is already gonna be like a half-hour video, and that's kind of insane. But if you do have access to my Patreon, then you can just click on this and just read this yourself, I guess. But it's a similar situation where you expect things like, 6, MDR is very negative, meaning we have a lot more supply than demand. That's where price fell. Or point number 8, where price, where we had MDR was massively high at plus 20% on Bitcoin. So price rises. So that is one thing you can look at as well. All right, now just to end this video, because this video has gone very long, is what can we do in altcoins to better trade them? Now, one thing that I think would be a good idea is to look at both the combined MDR and the altcoin MDR. So to do that, we go here to find the combined. And what we're going to look for the combined MDR is two things that can be bullish. One really bullish sign for MDR is when MDR spikes up. So an MDR spike up could still mean that MDR is negative. And in a kind of situation that we see from that is when MDR is negative, but then MDR falls like that. You can see that the amount of sell pressure is 248 million. That fell down to about 230 million. And the bids didn't really, the demand didn't really fall that much. So this kind of situation is actually pretty bullish when we get a large drop in the people trying to sell. And that will be, bullish here. A flip up is always very bullish. That's when MDR goes from negative to positive. So, from like negative 1% to like plus 2%, that's going to be very bullish too. So that's a sign that you may want to buy an altcoin or any, probably just Bitcoin. Now, a sign that you may want to buy an altcoin as well is the first thing you want to have is that the combined MDR looks good. Because here's the issue. Some of the MDRs on these specific coins, so if I go to like, EOS or Litecoin, some of their MDRs might be really positive, right? And that's, we should buy. Not exactly. You should always look at the combined MDR because that's going to tell you if it's likely that the overall crypto market is going to go up or down. Because all of these coins are very correlated. And just because you have a positive MDR on one coin, if the overall MDR is negative by like minus 5%, then that coin's probably just going to fall because every other coin is falling as well. So that's why we want to look at the combined MDR and then also the altcoin MDR. And I've done 2 videos on what does a bullish MDR look like, what does a bearish MDR look like. So you can look at those 2 videos for really this right here. But just the basic strategy here is look for combined MDR, look for these to happen, and then look at the altcoin MDR and look for these 3. If you see that combined MDR is bullish, the altcoin MDR is bullish, it's likely that the prices of that coin is going to rise. All right, so that does it for just like the strategy and that fun part of the video. Now let's take a look at the updates that were made to this site just super quickly. One new update to vcdep.io, if you have been using it for a bit, is I was talking about, USD worth of a coin being bought. You can also look at the combined, the BTC. So this is going to convert all prices to Bitcoin, as you can see here, and buy pressure to Bitcoin. And on the combined MDR, you can see the books in Bitcoin here as well instead. So instead of me saying, 20 million or whatever, we can see that there are 64 million, just about 64 million Bitcoin worth of buy pressure and 58 million worth Bitcoin worth of sell pressure. So that's one thing you can do to look at these. Another thing you can do that I find by far the most helpful is you click this. This changes a lot. Before we're just looking at the total order book for these coins, and for the combined MDR, I'm just looking at the total order book for all these coins. For ETC, I'm just looking at the total order book for Ethereum Classic, as much order book data as I can. But what's actually more helpful at times is if I click nearest 5%, what this does is it's going to tell me all buy pressure, all bids, all demand within 5% of the current price. So 5% below the current price. All offers, all supply, 5% above the current price. And this is going to give us a more short-term look at where that price is likely to go. So if I just clicked on 5% up there, and what you can now do as of like a few hours ago, just updated, and this may look a little bit crazy, but I'll explain why it does that, is we're now looking at the historical combined global market depth, but only each coin within 5% of its current rate. So this is like a combined short-term look at all cryptocurrencies. So you can see these MDRs are a lot higher, like plus 15% at 10:35 a.m. And I find this to be a lot more helpful with the 5%. Plus 15%, that means that overall, across all crypto markets, at 10:35 at this point in time, there were 15%, there's 15% more buying pressure than there is selling pressure. And also, we know that this data is only collected from 5% within the current price. So very short-term look. So if like a coin's trading at 1,000, we're only looking at its bids from 950 to 1,000 and its offers from 1,000 to 1,050. Now, if we go back to 1035 and see when MDR had gotten just crazy bullish at plus 15%, 1035 was here at the very bottom. And if I pull up any other coin that's, correlated to this, if I pull up XRP BTC, and I'm using the combined MDR just as a reference point, if we go to what point in time was it? What point in time was it again? I'm trying to speak English here. It was 1035. So 1035 was when we got that like crazy amount of bullishness coming into the market in MDR, and that would have been the bottom in XRP BTC as well. So you can look at that 5% right here. And the reason why this looks kind of wonky is because it only started recording 5% data at this point in time. So no, the combined books for all coins did not go from 126,000 BTC to 62,000. That's not what happened. It just started recording data. And you can also see the 5% for all of these coins as well. So if I want to find, hey, what coin looks like a really good short-term buy, what I would do is I would click hide books, because I only want to see the books with a lot of volume in them. So this is about 1,000 here. Here's 5%. And I'm going to click on is 24-hour MDR change. So what has had the most positive MDR change? We can see that ETC, TRX, Bcash have. Okay. And what has the most positive MDR? So it looks like Litecoin has a very positive 5% MDR, and Bcash has a very positive MDR and a great 24-hour change. Basically, you're going to want to look at both of these. And if both are very positive, that's a pretty good sign that the coin is going to move up. So EOS here, EOS, however, I don't know how you pronounce it, whatever. It's got plus 18.86% MDR on the 5%. And a pretty good 24-hour MDR change. So this is indicating to us that EOS BTC, looks like it's going to go up, and yeah. So that is some updates. There's so many updates on this site though that I have to say all of them though. Probably one of the biggest updates is it used to get data from every 30 minutes, and now it's getting data from every 5 minutes. 120, 125, 145. So instead of tracking data every half hour and we have to reference that, we get data every 5 minutes now, which is just, really helpful for really good short-term trading. Because here you can even see that the 5% for the global MDR went from about plus 15%. Now it's only at 6.68. So we're seeing that demand drop. But we're not seeing that demand drop to a point. We haven't seen that demand drop to a point yet where we got equilibrium or when we got supply higher than demand, where we got excess supply. So I wouldn't be shocked to see, maybe some more price movement up, maybe some price movement flat, and then maybe we get a fake out up, and then maybe that can happen. But that does remain to be seen, as they say. So yep, all these coins are now going to update every 5 minutes. So if I click on Ripple, and I'm looking at the total MDR, I can now see its data every 5 minutes. If I click on the 1 day, Right there, perfect. 624, 633, 634. Okay, updates every 1 minute or something. You can see it updates as quick as much as it possibly can now. So you can really track exactly when it had a very positive MDR, and here you can see it as well. Those very, very, very short-term MDRs. So I think that's just about all of the updates. Also, you can do a filter. You just click that, and you click, that. If you want to get only coins that have a lot of volume on their order books, you can do that. If I missed any updates or anything about this site, then you can just comment them below, and we can take a look at that. But I find it really helpful to click nearest 5% and then look at these, because these coins typically perform well when we go to the nearest 5%. But yeah, I would say that this is super helpful now. We go to the 5% global combined MDR, and it's really nice to look at. It's really helpful, as you can see there. All right, so that is going to do it for this video. I know a lot of people probably have questions. So if you have any questions, you can visit my Discord or visit my Patreon and shoot me a private message there. Or you can ask in the YouTube comments if you want a really short answer. And with that, I think this concludes our time together with this really long video. So if you stayed till the end, you're a trooper. Happy trading.